C is an entity quoted on the Nigeria Stock Exchange. You are provided with the following set of summarized published financial statements of the company for the year ended September 30th, 2014. Statement of profit or loss and other comprehensive income for the year ended September 30th, 2015 were given below. We are also given statement of financial position. All figure assumes to be correct. The following information is relevant. The first one. The following information is relevant. 1. During the financial year, the company paid a dividend of 87,000 to equity holder, and this has been accounted for during the year. The current market price of the company is 10 naira per share. Next one. The company is planning to take a long-term loan of 400 million from Consortium Bank. The company financial statements and loan application have already been submitted to the bank. Prepare the statement of cash flow submitted to the bank in accordance with provision of IAS 7. We can prepare our statement of cash flow using what we call the direct method and what we call the indirect method. And like I explained, what indirect method means is this. I have prepared my financial statement before. I have prepared my statement of profit or loss, and I have prepared my statement of financial position. If I have done that and you need me to prepare the statement of cash flow, I may necessarily not need to start from the beginning, that is to prepare cash flow from inception itself. Instead of that, I will just pick my statement of profit or loss, which I have prepared before. And for me to get this profit in my statement of profit or loss, you notice that there are some non-cash items that will have come here, right? E.g., I must have subtracted depreciation before. I must have subtracted things like impairment, if there is any. I must have added things like provision. I must have added things like loss on disposal. I must have added things like profit on disposal. But look at everything I mentioned. All these things I mentioned, they are non-cash items. So what I can just do is I can pick this profit I have in my statement of profit or loss, and I will just adjust it for all my non-cash items. So like we said in the format, we start with the profit before tax. And like I told you, what we actually need is profit before interest and tax. But if you check this question, this is gross profit, less admin, less finance cost. I have my profit before tax. So I did not have profit before interest and tax, so I will go with what I have, profit before tax. So what is my profit before tax? 170,000. This is it, 170,000. Now the question is this. For me to get this profit before tax of 170,000, there are some non-cash items that must have been added, while some non-cash items that must have been what? Deducted. So we need to adjust for it. But before I move on, I told you what I actually need is profit before interest and tax. Since I have my profit before tax, the next thing is finance cost, which serve as my interest, has been deducted before. If I want to do the adjustment, what will I do? My finance cost here, I will add it back, 1,000. Yes or no? So now, coming back to my question, I have my admin expenses. Now, admin expenses is 29,000. How do I know if there is non-cash item inside this figure? Yes, we can know. Don't forget, depreciation can be gotten from your PPE. So, which means that the first workings to be done is my PPE. So let us go to our statement of financial position under PPE. So, I'll be opening a working note. I have my PPE. I want to take all my non-current assets together once and for all. After my PPE, I have my goodwill. So now, what is the balance brought forward? My balance brought forward, that is in 2013. For my PPE, we have our PPE in this case for 2013 to be 22,000. So I will put in 20,000 rather. After that, my goodwill was 10,000. So at the end of the year, balance carry forward, that is end of the year, which is 2014. If you look at it at the end of the year, you can see that my PPE has reduced to 200,000. Aside from that, coming to my goodwill has become what? New. Now, this is the question. If my PPE at the beginning of the year is 220,000 and my PPE at the end of the year is actually 200,000. Now, if I go to my profit or loss statement, there is nothing affecting PPE here. So it means that for it to have dropped from 220,000 to 200,000, it means that we have charged depreciation for that year. So because if I bring my asset forward and it is 220,000, don't forget, for 2014 they will have charged depreciation to statement of profit or loss. So which means that my difference here is my what? Depreciation. So depreciation, which is what? Balancing what? Figure. So I will come here, and what is my depreciation? That is 20,000. Now, if it is 20,000, what will happen? Don't forget, in our statement of profit or loss for that year, part of our admin expenses, this depreciation is part of it, which means that they must have charged depreciation of 20,000 in our profit or loss for that year. If they have charged 20,000 in our statement of profit or loss, what will happen? We need to what? Adjust it. So in that case, let me come to my solution. So coming to my solution here, you can see there is an adjustment for depreciation of what? 20,000. Aside from that, let us go back to our workings again. In my workings, you can see that at the beginning of the year, my goodwill was 10,000. But at the end of the year, if at the end of the year and my goodwill is now 0, what has happened? It means that something has reduced goodwill from 10,000 to 0. So what can reduce goodwill is what we call impairment. So which means that there is impairment of what? Goodwill during the year. So goodwill has been impaired by what? 10,000. So which means that from the beginning we brought 10,000 in, but we impair everything 10,000. If I impair everything, automatically at the end of the day I will have nil. Don't forget, impairment is an expenses. So if impairment is an expenses, it will have been deducted to get this profit in the first place because it's an expenses. So if it has been deducted before, what do? You need to what? Add it back. So if I go to my solution here, you will see that my impairment is also what? Added back. So what you see, we are coming from a point. The first point is to adjust this profit. So I have adjusted everything in this question that is a non-cash item. So if I do that, I will add it to this place. So I will get 201,000. According to my explanation, this 201,000 is my what? Cash flow from operating activity before what? Working capital changes. So I don't think we have any problem in that. So before working capital changes. Now, what is the next thing we are going to do? The next thing is, if this one is cash flow from operating activity before working capital changes, the next thing is, what are working capital changes? What I told you, I said working capital changes are the changes that occur between your what? Current asset and what? Current liabilities. Don't forget, what are your working capitals? Your working capitals are your current assets and your current liabilities. So any changes that occur to your current asset and current liabilities, aside from cash and cash equivalents, will definitely affect what? Working capital changes. So let us go. We go to our statement of financial position now. If you see, I have used my property, plant and equipment. I have used my goodwill. The next thing I have is my inventory, my trade receivable and my bank balance. Don't forget, inventory and trade receivable will be treated as what? Working capital changes. But bank balance will be treated as what? Cash and cash equivalent. Don't forget, I told you, your non-current assets will be treated as an investing activity, while your current assets will be treated as part of what? Working capital changes. While your cash, your bank overdraft, all those ones will be treated as your cash and cash equivalents. So let's start. So things that will come here now are inventory, trade receivable, trade payable, other what? Payables. So let's go. For our inventory, I gave you an hint. I told you an increase in assets is an outflow. So look at it. In 2013, I have 80,000. While in 2014, I have 100,000. It means that this thing have grown. There is an increment by what? 20,000. So I will come here. Ignore this. This is an error. So increase in inventory. How much? 20,000. So don't forget, it is an outflow because it is an asset, right? I will come again to my receivables. My receivable last year was 60,000, but for this year it is 75,000. What has happened? It has increased within last year to this year by how many thousand? 15,000. What will happen? Increase in asset is an outflow. I will come here. That is what? 15,000. So I'm done with that one. So if you check under my asset, the only thing I have not touched is my bank balance. I then go to the next one, which are my what? Current liabilities. Now for current liabilities, don't forget I told you yesterday, decrease in liability is an outflow, while increase in liability is an inflow. So I will come here. Last year it was 90,000. What has happened to it? It has reduced to 60,000. If it reduced to 60,000, that is, there is a changes of what? 30,000. Any decrease in liability is what? Outflow. So the difference is 60,000, is 30,000, sorry. So in this place I will have 30,000. Next one is other payables. Look at other payable. Last year it was 40,000. This year it is what? 20,000. What has happened to your other payables? Your other payables has also decreased. If it has decreased 40,000 to 20,000, automatically I will come here, decrease in other payable 20,000. So the sum of everything here will give me my what? My working capital changes, and therefore we have 85,000. I think we are fine up to this level. After that, your finance cost, which is your interest, will appear two times. Now the first one is this 1,000. This 1,000 is for us to adjust, because I said something. I said the profit we actually need is profit before interest and tax, but since this is profit before tax, I need to what? Add it back to get my profit before interest and tax. So but what comes here, the finance cost that come here as the interest here, is the actual finance cost paid. Don't forget that it is possible that if you are owing, let us say you collected a debt of 100,000 and you are meant to pay 10% interest in a year, that is 10,000 from 100,000, that's 10,000 interest to be paid, but you only paid 5,000. According to accrual principle, you are going to account for the total 10,000 in your statement of profit or loss, right? Which is this. But what I actually need here is the exact amount you pay. In my example now, 5,000. So in this case now, let us see if there is any adjustment on interest. I will first of all come. Is there any owing of interest? Is there any prepayment of interest? Let us check our statement of financial position. Do we have any interest here? So other privatization, bank overdraft. So no interest. If there is no interest, so as when there is interest, this is what you will have done. I will have come to my workings, and in my workings I will have come here, working those two now, right? I will have said interest. So balance brought forward in the statement of financial position, but in this case my balance brought forward is 0. If it is 0, I will say that according to profit or loss. So according to profit or loss in this question, our profit or loss shows 1,000. So if it is 1,000, it means that total interest at the end of the year should be the same thing that will be in profit in statement of financial position. So balance at the end of the year, balance carry forward. So in my statement of financial position, if you check, there is nothing, but assuming there is figure in statement of financial position for 2014, I will have put it here. So in that case now, this figure supposed to give me what? 1000 at the end of the year. So this plus this supposed to give me 1000. But since it is not giving me 1000, it means that we have paid the total of what? This. So cash paid is what? 1000. So that is why this amount at the end of the day still remain what? 0. So what will happen? I will recognize what? 1000 as the cash paid for what? Interest. So in this case, I will come back to my solution. So that is why interest charge remain at what? 1000. So after I've done my interest charge, the next thing is to determine my taxation. So how do I determine my taxation? Very easy. Let us come to our statement of financial position. Do we have any tax there before? Yes. If you check here, you can see taxation. So we have taxation as at the beginning to be 40,000. Sorry, taxation as at the beginning to be 30,000, while taxation at the end to be what? 20,000. So I can go to my workings again. In my workings, I will start working note 3. So that is taxation. So we start balance at the beginning, balance brought forward. So my balance at the beginning for taxation, coming to this place, we can see it is 30,000. So I'll put it 30,000. I'll go to P or L. So my profit or loss. Sorry. In my profit or loss, if I go to my profit or loss, what is our taxation in our profit or loss? My taxation in profit or loss is what? 40,000. So if I come to my workings, I can see 40,000. So therefore, it means that the balance, expected balance at the end of the year. So what you are expected balance is what? You are expecting that if you add these two together, it should give you 70,000. But what is your actual balance? Balance carry forward. At the end of the day, my statement of financial position shows me that the taxation I'm owing at the end of the day is 20,000. So for me to be owing 20,000, it means that I have paid amount something in the year. Abi, you are expecting to owe 70,000, but you are owing 20,000. So you have paid. Cash paid during the year is how much? The balancing figure, which is your what? 50,000. So I will recognize that under my what? Tax. So coming back here, you can see that is why our taxation paid is 50,000. So after I adjust this, I will get my net cash inflow from what? Operation. That is 65,000. So that is that. We now go to investing activity. I told you what are the things that come under investing activity. Changes that happen to your what? Non-current assets, and in case you have investments in other company. This question is a very basic question. You can see that when we did our workings note 1, let me go back there. In my working note 1, which talks about PP, you can see that in this case, for my PPE and my goodwill, there is no addition to my PPE, there is no addition to my goodwill during the year. It's not like we pay any cash which relates to non-current asset during the year. We did not dispose any assets which will help us to have inflow during the year. So which means that in this question, nothing happened to our investing activity. So we can then move on to what? Financing activity. So again, let me remind you, what are the things that affect financing activity? Things that affect financing activity are things that affect your what? Equity and long-term borrowing. So everything that affects equity and long-term borrowing will definitely show as part of our financing activity. I think that is going on fine. So let us revisit everything. Now, again, we come here now. Let us take equity. For example, we have ordinary shares and we have retained earnings. So we go to our workings now. Very easy. So under my workings, I will come here. I'm taking working note 4 now. I'm taking equity, all the equities together. In this case, I have ordinary shares, and aside from ordinary shares, I have retained earning, and let me even put something there, share premium, because I will need it to explain something here. So balance at the beginning, balance brought forward at the beginning. If you check, our ordinary share at the beginning was 8,000. My retained earnings at the beginning was 197,000. Share premium, we did not have anything called share premium before. Now don't forget, any profit you made for the year, your profit will be taken to retained earnings, right? So profit for the year. So my profit for the year, go to your statement of profit or loss. What's your profit for the year? Our profit for the year is given as 130,000. Don't forget, where we do it, where do we take it to? Retained earnings. So in this case, if I look at this, at the end of the day, my expected balance at the end of the day for this one should be 8,000. For this one, if I add these two together, let me please open my calculator to do that. 197,000 plus 130,000 should definitely give me 327,000. So in that case, I have 327,000. So this one too is expected to be what? Is 0. This is what we are expecting. But if we check our actual balance at the end of the day, balance carry forward, we see that ordinary shares has increased to 10,000. We can also see that retained earnings, instead of it to be 327,000, my retained earnings in this space is what? 197,000. Aside from that, I also notice that my share premium is also nothing, it's also 0. But let me take you back to something. Go to your additional information 2. The company is planning, okay, additional information 1. During the financial year, the company paid a dividend of 87,000 to equity holder. So I will come here. Aside from profit for the year, whenever you pay dividend, you pay from retained earnings. So dividend paid is how much? Is 87,000. So 87,000. Now if I pay dividend, the total amount I should have in my retained earnings, my expected should be how much? Sorry, I will be on calculator now. That should be 240,000. We move on. Now it means that my expected balance should actually, for ordinary shares, should be 8,000. My expected balance for retained earnings should be 240,000. But look at something. For my ordinary shares to increase from 8,000 to 10,000, something must have occurred. It means that it can only increase if there is an issue of shares during the year. So this is a way they code question. They won't tell you something happened, but whereas you have to use your intuition. So in this case now, it means that the difference in this case, we will call it our what? Issue of what? Shares. So that issue of shares under ordinary shares is 2,000. But look at something. Whenever there is issue of shares and you issue your shares above par value, issuing it above par value will result to a what? A share premium. Look at something. We have retained earnings. We are expecting 240,000. That is the amount that we're supposed to have in our retained earnings. But we are having 250,000. where is the balance of 10,000 definitely coming from? This is a very tricky question. For us to be expecting 240 and for us having more than 240, it means that there must be an addition to retained earnings during the what? During the year. And the only explanation that we can give to the addition in this place is that there is a retained earnings. So which means that in this case, when they issue these shares, there is a retained earnings which amounts to what? 10,000. So retained earnings of 10,000. Now, but don't forget, we are told that our retained earnings at the end of the day is actually 0. But I'm saying that if there is a 10,000 under retained earnings, that 10,000 under retained earnings is as a result of what? Share premium. Because I can only transfer. When you did statement of changes in equity, you are told that you can transfer from one equity to what? Another. So which means that there is a transfer between what? Retained earnings and share premium. So I will transfer the 10,000 from retained earnings and take it away from retained earnings. So if I transfer this one, if I transfer 10,000 away from this place, this one will become 0. If I transfer it away from this place, I take it to where? Retained earnings. So 240,000 plus 10,000 give me my retained earnings at the end of the day of what? 250,000. Now in this case, what is the issue? We issue shares to the tune of what? Ordinary share 2,000 and share premium 10,000. So the total money we receive from issue of shares during this year is 12,000. So I will go under my financing activity. When you issue shares, money will come in. It will show as a what? As a financing activity. So let me go to my solution. In my solution now, you will see 12,000 as my share capital and what? Premium. Aside from that, let us go. We are done with equity. So after I'm done with equity, don't forget, two things affect financing activity. Things that affect your equity and long-term what? Borrowing. So I'm done with equity, so I can move to long-term what? Borrowing. Oh yeah, what happened under long-term borrowing? I will come here under my workings note 5. Coming to working note 5. Working note 5 is talking about 10% loan. So for my 10% loan, what is my balance brought forward? My balance brought forward in 2013. Check your question. For 2013, we have a 0. So if we have a 0, it means that at the end of the day, we should also have a 0. But my balance carry forward at the end of the day, at the end of the year, is 10,000. So now, this is it. If at the beginning of the year you have a 0 and at the end of the year you have 10,000, for you to have 10,000, it means that you must have collected money, you must have borrowed money during the year. So the person paid us how much? 10,000. So in this case, there is a cash inflow of what? 10,000. So the difference is what? Cash inflow. So the cash inflow is 10,000. That is why the 0 can become 10,000. So this is an inflow. Under my financing activity, it will show as an inflow. So I will come here. That is how much? Oh, I guess. Okay. This is it. Loan note 10,000 is an inflow. But don't forget, come back to your additional information 1. During the financial year, the company paid dividend of 87,000. Dividend relates to what? Equity. When you pay dividend of 87,000, since it is affecting your equity, it will show under what? Financing activity. And that marks the end of this question. So if I put it here, 87,000, I will come here, I will put it here, addition of everything here will be here. This is the net cash flow from what? Financing activity. Again, let us look at it. This is net cash flow from operating activity. Because we did not have any changes in investing activity, this is my cash flow from investing activity, while this is also my cash flow from what? Financing activity. Now look up. Addition of these three will give you changes in cash and cash equivalent for the year. But let me make your life easier. Let us go and do additional working note. So come to your working note 6. Under working note 6 now. 6. We are looking at cash and cash equivalents. So under cash and cash equivalent, what are the things I told you will be under cash? Cash, bank overdraft, and short-term investment. Coming to this question, so I will be saying that I have 2 years, right? I have 2013, I have 2014, and the difference between the two is what? Changes. So we start. Bank. For my bank, I'll come here. Bank balance for 2013 was 5,000. For 2014 it was 20,000. So look at something, please calm down here. At the beginning of the year you have 5,000. At the end of the year you now have 20,000. For you to have 20,000 at the end of the year, it means that your money in your bank has increased by how much? 15,000. That's your changes. So after bank, the other cash and cash equivalent we have in this question is what? Bank overdraft. So I will come here, bank overdraft. So for my bank overdraft, 2013, bank overdraft is a liability. So 2013, it was 10,000. 2014, if I check, it is 25,000. So if you come here, it means that you were owing 10,000 before. You are now owing 25,000 now. It means that during the year you borrow additional what? 15,000. Additional 15,000. So I can now add all these figures together. So in this case, for my 2013, I will have 5,000 negative. So my answer here will be 5,000 negative. My answer here for 2014, this and this will be 5,000 negative. Abi, why the changes is what? 0. Like I told you, cash flow is always easy. So our changes in cash and cash equivalent for the year should be what? Nil. 2013 is the year brought forward. Cash and cash equivalent brought forward will be 5,000 nil. Why cash and cash equivalent carry forward will be 5,000 nil. So let us go to our solution and confirm that. So adding both operating activity, investing activity, and financing activity give me my changes in cash and cash equivalent. The changes you just calculate, that is what? Nil. You must get the same answer here from that thing I just did now. Aside from that, what is my cash and cash equivalent brought forward? You may not need to show it like this. Just show it the way I did now. Cash and cash equivalent brought forward, which is 2030, which I just determined, is 5,000. Is 0. You add these two together, you have a 0 and you have negative of 5,000. So your closing cash and cash equivalent, this is an error, it is negative 5,000. So my cash and cash equivalent for the year is negative 5,000. So this is using the indirect method.